personal portfolio that runs into few thousand crores is what is rumored to be.
Ashoka, I made a 250 crore commitment. With my other stuff, about a 250 crore commitment.
So you put aside 500 crores.
Yeah, the next decade, maybe we'll do 1,000 crore.
After you exited ChrysCap, you continued to be an investor in public markets, at least from what we read about. So how has that influenced the selection of stocks that you have in your own portfolio? Ashish, it's an absolute honor to host you. With a career that starts off at Yale, goes to Harvard, the founding of ChrysCap into probably a $4 billion fund, a personal portfolio that runs into a few thousand crores is what is rumored to be. Your own journey as philanthropist, probably one of India's best known philanthropists that I know of. It's been fascinating and it's exciting to have you on the podcast.
No, thank you for having me. I've heard your podcasts and I really like them.
I'm honored that you've heard the podcast.
Of course.
It's amazing. Ashish, your journey of returning from the US to start a private equity fund in India at a time when India itself was not exciting. What was going on behind the scenes? Why did you even think of returning to India to set up a fund?
So I grew up in India. I grew up in Calcutta. I went abroad only for college, business school, worked there. I had this dream to be an entrepreneur at age 30. I discovered after doing investment banking as my first job that I didn't want to be in the transaction business. I liked the investing business. I had worked in private equity and the hedge fund business in the US. I hadn't worked a single day in India, other than a summer job at a bank branch for ANZ Grindlays.
Okay.
So I had no experience other than connection to India.
And even in the US, your experience was more as an investment banker helping deals happen.
No, I did work for 2 years in private equity. And I worked for 2 years in at Goldman, but in the risk arb business, which is hedge fund, not client servicing. So I had about 4 years of investing experience. I was only 30. I took the plunge because I really wanted to make a bet on India. I was very bullish on the country post the 91 reforms. And there was a slowdown in the late 90s. But I felt that that was a passing phase and that the country was going to do really well. And it was the right time to get started. It was a very difficult time to get started because the Asian financial crisis had just happened.
The currencies were melting down.
Yeah, currencies were melting. I was 30 years old. I had no experience back in India.
Yeah.
Most investors were not interested in investing in Asia. India had done nuclear tests in 98. So there was a risk associated with that.
Yeah.
But, I think the best time to get started is when things are down in the dumps.
But how did you build that confidence? Did you have enough of a personal financial security around that? Or was it like, let's take a leap and we'll figure out? That confidence was there that even if things don't work out, you'll figure something out?
Yeah, look, I didn't have huge financial security. I had paid off my loans and I had some savings, but that's about it. I did have, my parents were here in India. So initially we stayed with my parents and cost was zero. So that made it easy.
That's a great thing about Indian
culture. That's a great thing about And even when I lived in Bombay, a buddy of mine from Yale, his dad was living alone. So I stayed with uncle and no kharcha, virtually. I used to literally walk to work and meals were taken care of. So in that side, I said to myself, downside is low. I have good undergrad education, good business school. I can always get a job if I want one. So why not give it a shot when I'm young and I have the energy to do it? I didn't really think of plan B, to be honest. I had this confidence, not because I was overconfident, just because I said, someone will hire me. I'll get something. I've worked at Goldman before. I've got connections. People think I'm reasonably smart. I'm sure if I make a call, someone will give me a job somewhere.
And, getting the fact that you can get a job is something that you can envisage. But then when you go as a young, upcoming fund manager to limited partners or LPs and ask them to invest in your fund, what was the early reaction? And the context was India was not hot back then.
It was very hard. I'll tell you, I had a partner, Raj Kondor, who was my business school classmate. two of us had a small office in New York, which my former firm had given to us for free to operate out of. And we spent 6 months dialing for dollars and traveling all over the US.
How did you go about selecting with whom to call, whom to pitch to?
All through references, basically.
Okay.
It was basically 2-3 groups of people.
Hmm.
No large institution was going to give us money.
Mm-hmm.
So it was either Harvard Business School connection.
Mm-hmm.
It was a family office in New York, where through some friends I would have a connection, or NRIs. So those were the only people. We were lucky that I had an anchor. So someone actually who had been, I run a large financial services firm in Europe. He agreed to put in $25 million to be an anchor. And then Microsoft decided to come in as an LP. And the government of Singapore, through EDB, put in some money. We were only looking to raise 50 million. So the fact that we were more than 50% covered, right, while going out to individuals, made it a bit easier. But having said that, we had about a 98% rejection rate. So I think it was all about beating the pavement, getting to as many people as possible, because you're going to get a lot of no's.
Actually, oftentimes, like ChrysCap has bet against what is common wisdom. I remember in 2007, there was talk of ChrysCap liquidating a meaningful portfolio at a time when markets were upwards and to the right. How do you take some of those tough decisions when everyone is on one side of the decision paradigm and you're taking a very opposite call?
So I think firstly, in any investment firm, having good team culture is very important. Trust between people.
Mm-hmm.
It's not siloed. It's not political, where one person who has the deal and made the investment is very possessive about the investment. I think a good culture, people care about the overall success of the firm. Obviously, as a leader, your job is to take a call and carry people along. But I don't think we had an issue there. I think most people understood that, we were in the middle of a bull market, valuations were high. This is a good time to actually take some chips off the table. And so it was done as a collective view, as opposed to just one person feeling that this was the right time to liquidate some investments.
And on that point, now at that position where you think that you should exit the firm, how did you think about leaving behind the economic interest that you had? Like, as a founder, you would have what is called GP ownership in the fund. How did all of that get reorganized when you exited?
Yeah. See, I firmly believe that you create value when you're there. And then after that, it's the individuals who are there who really create the value and therefore are entitled to the profits, the GP stake, etc. So my philosophy was, I was there for the first 5 funds. I had a certain ownership stake. I benefited from that. I did extremely well. And then post my leaving, I had zero equity. My colleagues who took over, they basically own the firm. They run it. I didn't have any rights. I didn't have any ownership. So it was I just walked away I felt gracefully. Because,
This is very
now it is
counterintuitive, Ashish. I mean, like
But,
you've set up the
I
fund.
think investment firms are different from like a cement business where you bring in an operating CEO and you go on to do something else.
Sure.
I mean, these are people businesses. So rightfully, the people are the ones who create the value. They are the ones who should own it
Sure.
and run it. And I think if you look at successful firms like Warburg Pincus, large firms, the ownership is now quite 50 plus years on. The ownership is quite dispersed, quite widespread. And when the CEO or lead partner retires, they fade away into the sunset and the next generation comes up and takes over as leadership. So I think if you want an org to sustain, it is the right model for an investment firm. If you're running it to maximize your wealth and then to sell it to capitalize your stake, that's a different model.
Ashish, what I've heard when I've spoken to investors is that there are usually 2 or 3 investments that they call the defining investments in their journey, either in terms of the economic or the upside that they had, or in terms of the learning that they had in the process. When you think about your investment journey, which are some of those 2 or 3 that are top of mind, where you say that I'm glad I was involved, or that I learned a lot as a result of it.
Yeah, I learned a lot from our investment in Shriram. It was, as I said, there were 4 listed companies by region to do the truck finance. The founder is a very, very evolved individual, Mr. Tyagarajan. Very simple, Spartan, no technology, works out of a small office. Very unique culture, very grounded org. And they know their business cold. They were a monoline company. And they merged the company together. It was about 2,000 crore AUM when we invested. And just watching how, looking at it through a very traditional suit boot lens, you would question, the capabilities. But there was an innate groundedness, salt of the earth nature, connect with the customer model that was so powerful that allowed them to grow. And a very unique way for a founder to behave and to function and to motivate. And again, a culture where hardly anybody ever left that enterprise. So a lot of learning on, how you keep your people, how you don't need the fanciest people to operate, how you run a business model where you have a real moat for a long, long period of time. Others came and they started, but they could never really build the kind of business these guys built. So very interesting learning. I think there were others like Mankind Pharma, where, I remember going to their office early on, and when they were a small company, the aspiration was to be number 1. And by a certain date to be in the top 5. They had all these things in posters in the company. It's interesting how you announce your longer term ambition.
Yeah.
And it's there in front of you when you're sitting in the meeting every day.
Yeah.
And you have this inner drive and motivation to get there. And Bhai Saab, Ramesh Juneja was the driving force, and his brother Rajiv and others. And, just to see how they did it year after year, organically. They never needed to acquire, how they motivated the sales force, how creative they were with new product introduction. And it was a gradual, you come from rank 20 to 18 to 15 to 10 to now in the top 5, and with the ambition to eventually get to number 1. And, it's how you're on a 30-year journey to get to the top, but you're still motivated to do it, every day. And it's just faster organic growth every day and a really solid model on the inside that gets you there. So very different learnings from different kinds of people.
And how has some of that impacted your own personal investment journey after you exited ChrysCap? You continued to be an investor in public markets, at least from what we read about. So how has that influenced the selection of stocks that you have in your own portfolio?
So my brother and I invest together. He's a very good investor. And we are blessed that we have a similar mindset, which is a kind of Graham and Dodd, Buffettist type of mindset, which is long-term. So even in public markets, you take a 5-7 year horizon, concentrated, typically 10 to 15 companies. I don't call them investors like you use the word names or stocks or a company, because you're investing in a company.
You're part owner of a company.
Yeah, that's the way, that's the mindset you have to look at it as. And very fundamentals driven, and value oriented. I mean, like right now we're in the middle of a bull market. It's very hard to find any new investment because everything is expensive. So value oriented. And finding good businesses that are well run for the long term, that will have a moat and that will have reasonable return on capital, not super high, because then your universe becomes too small. But I would say 13 to 15% ROE and above, and growing at a reasonable pace, and run by people where the integrity level is high, where they have a certain ambition. And so it's looking at, I think once you put on the frame of, I want to create returns over 10 years, it's very different from this myopic 1-2 year kind of. And because it's our capital, we're not answerable to someone around quarter to quarter returns.
Yeah.
And
so
we may
be underperforming for some time.
And frankly, when there's a major bull market, you will underperform, because if you switch to cash, or if you're not willing to dabble in the riskiest companies, you may not generate. Frankly, I don't even look at, maybe my brother does, but I don't even look at the month to month, quarter to quarter. I don't even know what they are.
Amazing.
I don't even know whether we did better or worse, what the return was, etc. But we do look at the companies to see, are the companies doing as well?
Sure.
Are they doing better? Are they performing?
Hmm.
Is there something that makes us question their long-term ability to succeed? That's more important, to be honest.
Besides public investments or part ownership of public companies, do you also invest in private equity yourself? Do you invest in other asset classes?
Not really. I mean, we have, I've invested a little bit with ChrysCapital in some of the funds after I left. I, not no other private equity. I have, we have 6, 7, 8 small private investments. We did that in a phase between sort of 2015 and maybe 2019. And then we stopped. We felt two reasons. One is the market was overheated, too much money. And then two is we just felt this is not our forte. I'm anyway not involved day to day at all.
Sure.
My brother is, he prefers public markets anyway. And there's some degree of adverse selection again, because if you're not a full-time VC, are you necessarily seeing the best investments?
Sure.
Are these just your friends who have passed on things? So we stopped. But most of what we did was more consumer-oriented, as opposed to tech models where we thought, they could flame out.
Amazing. Ashish, you were a true blue capitalist investor.
Still am.
And you still are, and you're applying that to a whole different world, which is that of philanthropy, of giving away, of creating other types of institutions. When did you decide to make that switch, and what was the trigger for it?
So I had this aspiration a long time back that I wanted to be an entrepreneur at age 30, and I wanted to, in my mid-40s, have a second career. So I think it's a good thing to have early on, because you start thinking proactively about what you really want to do. Education was close to my heart. And so, when I thought of leaving the corporate world, the PE world, I wanted to make a difference in the education space. Fortunately for me, Sanjeev Bikhchandani, who's the founder of InfoEdge, Naukri, approached me in 2007, and we met, and he really was passionate about the idea of building a new university.
And by this time, you were already...
I was in ChrysCapital.
You were still at ChrysCapital.
Yeah. And I also was, very passionate about this idea. It's something I had thought about. So, and we pulled in Dr. Pramat Sinha, a couple of others. And so it's something we were, working on behind the scenes, Ashoka University. And the land was only purchased in 2010, and we only became a university in 2014, which was after I had left. So this was something that was cooking. I also wanted to do something in school education. I had made small grants to nonprofits while I was in my PE job. I even got onto a couple of advisory boards of nonprofits. Small amount of time, mostly Saturday meetings. It was a way for me to learn a little bit about this space, but not a huge amount of money that I was putting in. And that then made me realize I really wanted to work on early grades, primary school, grades 1, 2, and 3, because learning was breaking down early in India. And if a child can't read by the end of 3rd grade, you can't transact the curriculum. And so your learning levels plateau.
India is considered to be among the lowest in that.
Yeah, 55% of the children. What we call learning poor by the end of class 5. And then they kind of get left behind forever. So we wanted to work on the bottom half, and we said the only systemic way is to do it with government. So we set up a foundation called Central Square Foundation. So when I left, these two were already cooked. Ashoka had been working on it.
Sure.
And Central Square Foundation, I had hired a small team a few months before I actually left, so that I could hit the ground running. One thing I wanted was, if I was going to switch to a new career, I didn't want to sit on the beach for 6 months or a year or anything like that. I wanted to jump straight into my new career.
How did you decide what quantum of capital should you move away from some of these public market investments and allocate to philanthropy? Because
Yeah,
I think one challenge most families have is figuring out what is the right quantum. Is it 2%, 5%, 10%, or
yeah,
in Buffet's case, probably 50%?
yeah.
So how does that figure out?
So I didn't have a percentage number when I first left. I was 43. Um, my children were still younger at that point in time. I didn't know what the world was going to look like 5 years, 10 years, 15 years later, etc. So I said, let me do it in phases as opposed to just plonking down everything at once. So with Ashoka, I made a 250 crore commitment. And with my other stuff, about a 250 crore commitment between CSF and incubating a few other orgs.
So you put aside 500 crores.
Yeah, for the first decade, basically, first 10, 11 years of my, since I left. Now, as I reflected on, now that that's been done, and I said, now the next decade, maybe we'll do 1,000 crore philanthropy, which, is manageable given our capital, etc. And could be even more. But I'm conservative, so I never want to, build up more than we can. And that's not the end of the journey, because even when I'm 55 now, even 10 years from now, hopefully we'll keep doing more afterwards. So I feel, you can always have this intellectual exercise of how much should I do. I feel most people get started. So we say give sooner, give more, give sooner, give better. So just get started, then grow. It and for some people it may be saying, I want to do 10%. For some people, Rakesh Jhunjhunwala used to say, I have 3 children, philanthropy is my 4th child, so I want to give 1/4 away. That could be another way to look at the world. For some, it may be, I get a dividend, I can't sell my shares because I'm part of a family structure, so I'll give away half of my dividend or a third of my dividend. I think there are different ways. Or Abhishek Lodha now has put a quarter of his company separately, the shares, the dividend, and eventually it'll be sold down. The Torrent family announced 5,000 crore towards philanthropy. So I think some big things are now happening. I mean, for me, IT sector is the forerunner here. If you look at IT, whether it's Mr. Premji, who's the guru and the role model here, to Shiv Nadar, who's been incredibly generous, to the Infosys founders, all of whom are philanthropic. And Nandan, of course, has done so much.
Including his time.
Time and the incredible work. So, and now Mindtree promoters, you look at everybody in that. So I hope this becomes a norm in other sectors as well. What the Torrent family has done in pharma, I hope 10 other pharma companies now, promoters, start saying that they should do the same. And the same with Abhishek Lodha, what he has done, should inspire others. So, in fact, we've set up an organization called Accelerate India Philanthropy, whose mission is to go and promote the idea of philanthropy amongst wealthy people. So inspire, but also work with them one-to-one to help them in their giving journey.
I think a lot of your work has also happened in encouraging other people to contribute. I remember meeting you a decade ago where you actually came and made a presentation. And, one would wonder, why is Ashish Dhawan making this presentation? But I think some of these are very long gestation, which has bigger compounding impact on the whole philanthropy situation in India.
Yeah, I'm a big believer that, look, at the end of the day, my own work is small. We are all here contributing in a small way towards nation building. What motivates me most is this idea of Viksit Bharat, or India being a developed nation in 2047. That, at the end of the day, it's rapid, sustained, inclusive GDP growth that will solve all problems and job creating growth. Right? And that's the journey India needs to stay on for the next 25 years. That's the only way China lifted 800 million people out of poverty. And I don't mean just basic poverty, which we've done, but getting them to a level where they have a reasonable quality of life. So we are on that journey. I'm playing some small role through education, but now I've set up the Convergence Foundation where we work a lot on economic growth, human capital, other areas. But I think if there's so many other smart people out there, and if we can get them also moving on this journey, they can make a huge difference to the country. So if in some small way I can help with doing that, because I was early in my journey, I did this when I was 43. I'm doing it full time. I'm a little bit of an unusual beast in that sense. So I have some credibility because of doing that.
Yeah.
So if I can leverage that to encourage others, I would like to, because I think they will make a huge contribution and they'll get a certain sense of purpose and joy which you can't get from your day-to-day business.
I was reading recently about this framing that you had of, I think, Bazaar, Samaj, and Sarkar, and the Sarkar element of it, which is working with the government, seems a little intimidating for a lot of folks. Like,
Yeah.
there's this huge bureaucracy. There are potentially different incentives at their end. How has that experience been for you?
It's actually been very good. I must say, not just the central government, but state governments as well. Across political parties, doesn't matter whether it's BJP, Congress, or some other party, they all now want to make a difference. Most states, most chief ministers want progress in their state. So this is a good backdrop, I think, in which to operate. Two is they are willing to get outsiders. As long as you have no hidden agenda, you're truly there to make a difference and you're working pro bono and you have capable people who can support them and you don't want any of the credit. All credit at the end of the day goes to the state.
Sure.
So my big realization is I think most people in business, they want to stay away from government. The feeling is, I interact with government only because I know the rules can affect me and so I have to guard against
Only
that.
because
Or
I
I
have
need
to.
certain approvals,
Yeah.
so I have to deal with government, etc., etc. Or to protect my business, I need to deal with government. Or to protect my product from the Chinese or whatever, I need tariffs. That's why I need government. I think here we have a different realization. When you work on the social sector, ultimately the biggest actor is government. Government of India spends 9% of GDP, almost $350 billion on the social sector. What is a philanthropist going to spend in comparison to 350 billion? So government is the big actor and they are the ones who have scale. When we talk about government schools, there are 1.1 million government schools. So some NGO can set up 100 schools, but how does that compare to 1.1 million government schools?
Correct.
Same thing in health, same thing in any other area. So we feel making government more efficient or helping them is the highest ROI.
Absolutely.
And honestly, there's so many good politicians, officers who want to make a difference. We are a small actor enabling them, supporting them in that journey to make a difference. Same is true with economic growth. The private sector creates economic growth, but government has to create the enabling conditions for growth.
Sure.
The right policies, and implementation of those policies. So if you can play some small role, like say with the whole Trump win, there'll hopefully be even more tariffs against China.
Sure.
That should benefit India in a big way, the China plus one. We have not benefited from the China plus one to the extent we could have.
Maybe
We have one
Vietnam and
Apple.
some of these guys have done
We
better.
have one Apple that's done a great job,
Sure.
but we don't have that much more to show.
Yeah.
And I was in Vietnam earlier this year. I think Vietnam, let's face it, has done a better job than India. But all is not lost. I think, but we're running against time because the next 5 years is the window when a lot of these companies like Apple would say, I want to start migrating out of China.
Sure.
I need a second or third production base. We have to capitalize on it. Now, I think government's very, very open to looking at new ideas, new policies, people working alongside them make that happen. So I think even on the economic growth journey, whether you look at exports, ease of doing business, urban infra policies, women's representation in the workforce, there's so many critical issues, levers for India's growth. There's a huge opportunity to work alongside government on that.
I feel like, Ashish, we can continue this conversation forever. Very few conversations leave a lasting impression. This is right up top. Thank you so much for joining us on the
It's
Create
an absolute
podcast.
pleasure. Thanks so much for having me here.